Okay guys, so I am actually going to re-record the video from last week because a lot of you guys couldn't really see the wicks from the Euro USD trade. So this is a trade that we had taken, I wouldn't say now, or we had set up, I want to say now, like 2 weeks ago, and then it triggered after the news announcement. It was one of the cleanest layouts I had seen since I've been a part of the Forex group and I've really been engaged with you guys. So I'm actually going to go back, and instead of redoing the video with the different time frames or redoing it on Thinkorswim, I'm actually going to let you guys, guys can go to a previous video or look it up and see how the trade clicked. And then I'm actually going to walk you guys through the entire process, going from start to finish, exactly how this strategy or how I came to find this unfilled orders and how it works so well. So with that being said, the original unedited template that ended up triggering. So I'm going to go ahead now and erase all of the drawings on here and then remake it for you guys. So the first thing that I'm going to say, guys, is that I did forget to this last week, and this is greatly inspired by Jody Wong's strategy that really inspired me to find this. And so one thing that I forgot to mention is that this is in fractals of 6. So we're going to be doing so I'm going to personally do monthly, and then working my way down to weekly, daily, and then it's going to be 30-minute, 15-minute, 5-minute, 1-minute, 3-hour, etc. So I did forget to say that last week. So the first thing I'm going to do is I'm going to go to the largest time frame. And the reason I'm going to do that is because I want to start to, I don't use curve, and I think I said that before, and I find that, at least for me, either I don't understand it correctly or that it's a little bit too open to interpretation. So I do like this way of doing it because it gives me a context of the largest amount of unfilled orders in the way I think of it, and it gives me a context of where exactly price might go in different areas by drawing out the wicks. So the way I think about price action in general, just a quick recap, is I kind of think of them as, if this was Sam Satin's desk, right? It was like, you know, they say that this is like a photo negative. We want to find the unfilled orders, and what we're looking at a chart, we're finding the filled orders. So the way I think about like wicks and price action from largest time frame to smallest time frame is that the wicks themselves is almost like a spear of fire coming into like Sam Satin's desk of like unfilled cash orders and burning through the cash. So it's basically, when price touches that, in my head, it's burnt unfilled orders, and then new orders come in and then shot price out. So with that being said, I'm going to go from the largest time frame to the smallest because I'm going to at least set an alarm of the highest time frame best prices, in my opinion. And that way, whenever it comes on sell or it comes to supply where I do want to sell, I will be able to know when that happens by drawing those out and setting an alarm. I don't wait for these to happen. I'm not going to hold my breath on them happening. However, when they do happen, I do want to know. So I want to draw them out and set an alarm for those. So with my supply and demand kind of spears on fire, Pac-Man theory, like orders being eaten as they come to price, something that I like to think or consider is, as we have more and more algorithms and robots trading these days, I find supply and demand, from what I've noticed, to be the truest. If obviously on the largest time frames, it seems pretty absolute, down to like maybe the 4-hour, and then beneath that, I think that's, in my opinion, from what I've experienced, I'm not saying this is right, but just been my experience, that at that point it seems like algorithms actually tend to kick in. And so I find supply and demand in my experience to be the truest from the largest time frame down to about like the 4 and 3-hour, and then from there, I use kind of a modified version of price action. So I'm just going to go ahead and go from the monthly and start drawing out the wicks, like their unfilled orders. And I'm going to start setting alarms for those when it comes to those prices. And again, this is going now from the monthly because it's more of a why not question than a why so, in my opinion. When price comes here, I don't care what's happening. I want to be able to see it. And I think this could also help you find like the whole fresh and authentic, if you guys remember that, or if you guys, I'm not sure if it's still used, but it also kind of helps me see like when price have been kind of eaten at those levels. So in my head, there's been new buyers coming in from like the largest time frame between here, and now there's obviously new buyers coming in. So if ever these buyers in my head get violated, it's gonna gravitate to like these orders. So that's kind of my logic on going from largest time frame to smallest, just putting that out there. And again, so like for example here, the reason I'm drawing this one over this one is because it seems that new buyers came in, so price never completely retested and touched that. and then I will cut into those time frames a little later, and you will see why. Inversely, I will do the exact same thing right here. And I will actually draw a new box. And again, we're only going to draw boxes. Like, I only did this conceptually like the first couple of times I was looking at charts. After that, I already knew what I was looking for. So this is more like, I think, to help you conceptually understand this, the why behind the what of kind of watching the unfilled orders and seeing these being like exact, more or less like eating away, right? Or, you know, you can see these coming in, etc. So that's kind of my initial train of thought. And the reason I'll do new boxes is so I can easily identify with my eye as I get used to finding it, you know, without the boxes, new buyers coming in. That's the reason I'm drawing new boxes instead of just extending them at the beginning. Again, this is something that I would say I maybe did on a couple of charts, like maybe 4 or 5 times. And then after that, my eye was just trying to find the unfilled orders. Going back to kind of the curve statement I said earlier, because I don't use it so much, what I would do is, let's say as price starts to come into these different ranges and areas within these wicks, I will find this will be, for example, my new curve. When price comes here, as I work my way down, this will be my new curve because it is the highest time frame unfilled orders that I've found down, working my way to the lowest. And so then if it's range bound, I will find a zone within these wider zone ranges. So that's another reason why I'm working my way down from largest time frame to the smallest. All right, guys, so now this is my drawn out highest time frame. Again, I've done the wicks here, and I know this can look initially a little bit overwhelming, but the only reason why we're drawing these boxes in the first place is just so we identify where orders have been penetrated and bounced out of. So the reason I'm drawing the wicks is because the way wicks are formed, if we go back from the beginning, is because it was the low. So whenever this one was made, price opened here, it fell up here, and then this was the high, and then it closed here, right? So the low of this month, for example, was down here at 1.114. And the high of the month was 1.1441. However, it opened here and it closed here. And the reason I know that's because it's a blue wick, or it's a bullish wick, whether you have it blue, green, yellow, whatever color you have. So my logic behind that is, when price came down here, buyers decided, wait, no, we like it here, we're gonna come in. So these orders, unfilled orders, came in, they were eaten, or they were replaced with new orders and then shot out of there. That's why I'm doing that, only to train my eye from the largest time frame, starting of where buyers found price attractive. And the highest time frame, the higher time frame, the more buyers are implied, in my opinion, because more people are willing to buy in a month than they will buy in a 1-minute algorithm move. So now I'll cut my monthly down to a weekly, which, if you guys just to be sure you know, that essentially means that each candlestick is a week, and the high and the low applies, to those candlesticks. So one candlestick is now representative of 1 week with the same high and lows rule. So now I'm gonna go ahead and do that. I'm gonna use a different color just to give me contextual, visual understanding of where new buyers are coming in as this time frames become smaller. So I'm just gonna go ahead and do it the exact same way I did the other one. I'm not gonna record the whole thing. I'll just let you guys do it on your own. Okay, now that this has been done, I will say there was instances where I would have usually wanted to drag one of these little boxes to come in and cover the entire zone. The reason I didn't do, for example, like this box that way is because I don't want you guys getting used to cutting through candles, because that's how people get wicked out. I get that's not going to happen. See, I wanted to do that. I get that that's not going to happen on the weekly. You're probably not going to get wicked out of a level, but I don't want anyone to, especially if you're starting off new and you're doing this exercise to kind of find unfilled orders and then zoom in on finding it supply and demand levels. I don't want you guys to get used to cutting through candles on a smaller time frame, because I promise you guys, if you've been stopped out in Forex because it just touched your zone or it just kissed your level or whatever, it probably happened when you were cutting through candles during the London session and you got wicked out or stopped out or whatever. So even though there's a larger time frame, I don't want you guys doing that. So that's why I just drew them wick by wick. And if a candle cut through, then I just drew a new box. Again, this is a 2-time, 3-time chart exercise, and then you're just gonna, your eye will just find unfilled orders from that point. So now I'm gonna cut down to the daily. Now on the daily, you can do a few things. You can start drawing new boxes to start to kind of identify or just to train your eye as to where the orders have gone to, like in the different time frames. But again, the daily is in the context of a larger time frame. So what I like to do from the daily on is I like to start trimming the boxes down. So I guess how I would find like fresh or authentic kind of a thing, where I just start seeing what was already eaten away now at this point. With that being said, on the daily, I might start drawing the lines, price lines, instead of drawing the boxes and these perspective wicks. So to not confuse anybody too much, what I'm going to do now is I'm just going to shift the way the boxes are now to accommodate those things. So for example, we can see like all of this was pretty much taken away on the daily. And I could see now that this, and now the daily box that I drew will appear. So now we can see that this cuts down now to this. So that's the new weekly, as that was kind of eaten away. And then I'll modify this. There's not really anything here anymore, because there's no more wicks here. So now my eyes being refined to a specific zone. So that's why when you guys see me in a lot of the videos calling the very bottom or the very top of a specific move, this is pretty much what I'm doing, but I'm not drawing box anymore. I'm just looking at it with my eye at this point and just using the lines. I'm going to go ahead and remove this weekly box or this daily time frame wick box to avoid any confusion, because it ended up appearing behind the monthly and the weekly. So I'm just going to remove it to not confuse anyone and just go by using lines at this point. This is also the point where you could realize, or you could see that you can go actually from smallest time frame to the largest, which is I think what Jody Wong's class actually did. But to be completely honest with you guys, I don't remember specifically, but I do remember I shifted to going from largest to smallest because I did it at where I am most willing to control price and setting alarm at those points. So I've now removed the daily alarm, or the daily box, excuse me, on the box of the daily time frame wicks. However, I did keep the lines that belong to the daily time frame wicks box because I couldn't see the box, so I just drew the lines over it, the price lines. So that's why these lines are here now. So now that I have these daily lines here of where the box would have been, and I see that there's a box up here and a box up here, now I know to now look at what's going on right here within my daily. At this point, I see that the top of the daily box, where the top of the daily box would have been, is now here. So now I'm going to go now, which takes us back to 612 or so. So now this area has been specifically highlighted by my eye just by drawing the boxes and the wicks as if they were unfilled orders. And the reason is why is like when we think about white space, like if we see, let's say theoretically, like a stack of 100 million buy orders here, right? And then these weren't filled, so it just shot up. Whenever you think of something that comes to a really good price, you're not going to pull the order. I'm willing to buy Apple at $142, for example, today, last month, last year, 5 years ago. I'm not going to pull that order. So that's kind of the logic of why I keep the alarms there. Now, another thing that we have now casually noticed as we refine the box or the lines that would have been on the daily, what we notice is now this is a pretty perfect rally base rally that our eye just found by cutting down on the orders the way we did it, considering the white space, right? So there's a ton of buyers here, a ton of buyers here. And the reason I'm drawing this now is like going back here, just to reiterate, we trimmed down the boxes here. There's no more wicks, so that made me go back in time and look at what's beneath these boxes So let me just extend these back just so that you guys are clear. So again, this was like a higher time frame kind of a box. So now that I've extended this box, and the reason I extended these boxes after I cut them down to the daily time frame is because there were no more wicks here on the daily time frame. So now I cut these boxes down and I extended them back to here. And so that's what pointed my eye to be here. Now that I'm looking at this, because I can see that this box is purple and this box is pink, I know that this extension is from a monthly box of unfilled orders because it's purple and that was a monthly color, and a weekly color. Now that I see that, and I see that all of this was kind of eaten away, that's why, just to make sure you guys are really clear, that's why I could go ahead and now point down at what was seen and now look at just this part for both the monthly and the weekly. So because there was no more really wicks here, that's why I just cut all the way down to these wicks that are still left here. So I consider these to be now unfilled orders. Now, as we zoom into that, what else do we find when we zoom into that is a rally, a base, and a rally with an explosive move up. So we can see that this explosive move up came from generally these unfilled orders, because if there was, let's say, 100 million unfilled orders here, it shot price back up. But because I'm looking at the daily wicks and price couldn't even keep itself there, contain itself there for the day without shooting up, that's why I am suggesting or assuming that this could be a strong area of unfilled orders. And now that I've cut down on the wicks and the time frames, now I see there is a rally, a base, and a rally. Now, if you're a supply and demand student, you would probably take this entire zone 1, which is an entire daily, which is, you know, from here 11170 to, what would this be? To 1200. I mean, that's quite a area of margin of risk, or that's quite a zone, right? So I'm just gonna go ahead and draw the OTA demand area, you know, more or less here, from here of you know, this whole area, right? So that's quite a sizable risk. But it's fine. It's not terrible. To be honest, the risk reward on this is not bad. So I'm just going to go ahead and I'm going to change the color of this just so that we know that's what many would call OTA demand. So I'm just going to edit the properties and I'm going to make OTA demand orange. Another thing I would say is let's say that price would break this and it was range bound here. This would be my new quote unquote curve. The price of the unfilled orders as I see them, or in my interpretation, between these two weekly demand orders or these two monthly. So if this white space, if it was range bound here, this would be my new theoretical curve, the unfilled orders between that week, if that makes sense. So to avoid any confusion, some people might be tempted to extend this box, let's say, and make it all of this, right? Or extend this one and make it all of this. But then that, for one, that's a giant zone. However, all these orders were also already kind of eaten or filled away. So that's why I do not extend boxes, and I don't want to encourage anybody to do that. So we're going to leave that how it is. If price again became range bound here, this would be my new curve. Now, another thing on a side note, if you guys follow Michelle Volmering, who I love, and Jody Wan, all these people, you also see that this would be an area where many could call a flip, and the new violated supply also now became demand. So now we've identified and found this specific area or zone here, and now we're seeing the a rally base rally, we're seeing a potential flip, and we're seeing unfilled orders. Now this also, if you follow David Warner, would be dancing with the quarter theory at 1.118. If you are testing 1175, it would probably not penetrate. It would probably not fall below 118 or something like that. Like if you consider the butter zones or whatever. So that's another alternative. So I have a supply and demand area right around here. I have a quarter theory like butter area or buffer area like David Warner likes to say. And I have a remainder of unfilled orders. So with that being said, now that's why with the news announcement before it came out, and I was drawing my areas with Bader, that's why I had highlighted this specific area. Now ahead of the news announcement, I cut down to the 4 hour, and if I'm gonna walk through the steps with you guys, like because obviously I did this in my head at this point, but again on the 4 hour I would highlight the level of wicks here that are being created. So I could see that there's obviously a lot of, so every time price comes up here, new sellers are coming in. So I'm just going to change the color of this box only so that you guys can be clear or not be confused about the different time frame boxes. So my 4 hour will be this. Okay. And like just food for thought, I do like to make the smaller time frames the lighter and the highest time frames the darkest, just so that in my head I can conceptually see like the amount of unfilled orders. So here I could see that every time price would penetrate this in the 4 hour, it wouldn't close up there. New buyers would come in, whether they're algorithms or institutions, whoever they are, they would come in and shoot it and just bring price down here. So the candles never closed above this. So this was why now this would be my new area of a huge ceiling of sellers. So in my head, there's just a whole bunch of $100 bills here that are just being eaten away and then being refilled and pushing price down on the 4 hours. So to be fair, we would actually also draw a box here on the smaller time frame, and I get that. And so this is what I'm going to address next. So again, I'll make this the lightest color. Okay. So that's why I still use supply and demand, and I use all these other things too. I just use it as a knowledge enhancer. And I think even one of the students pointed this out. I was like, well, why not this one? And like, this is pretty perfect. Like it is a quarter, it's 1.25. It has a lot of things going for it. And for me, I guess it was a couple of things. One was the degree of the news announcement. I mean, it was going to be pretty big. It related to Brexit, right? So that was one. Number two was I didn't like this risk reward. And that's where I don't necessarily pair all time frames together, and I don't use opposing zones within the same time frame necessarily ever, really. But that's just me. And I'm not saying there's anything wrong with that. I'm saying that's not something that I do. So I didn't like this risk reward. So this also has to do with the fact that I don't have to take every trade just because it's there. And so then the next thing I said was, well, we have this supply or the demand zone here, the ZOT marked demand, but I do like the price down here, and it may not come down here. I don't know if it will, but if it does, I am comfortable having this here and then only risking 10 pips. This is about a 10 pip risk, really. And so that's when I said, you know what, if it comes here, like, I'll create a buy order. Here is not, so one of it was I didn't like the risk reward on that. Even if it went up here, I just didn't care for it. Two, even if we cut down to like the smallest time frame, and I guess I'll just do that myself. And on the 5-minute time frame, we can see here that 2.125 or that major quarter was pretty severely violated, coming down at 1.234. And it was also really sloppy. I don't see any supplier demand clean areas here. I just didn't like this zone. I said, if it comes down here, like, if it'll destroy, it'll kill the 1.125. It just will. So then that's why I said, when we were Skyping, I said, I'll take the next one, which was this one. This was a 10 pip risk. There was a really strong demand zone right above it when we found it. You guys saw that. You can go back and see that. There was a lot of things that I liked about it. I like that it was only a 10 pip risk. I like there was a demand area right above it. I like that it was kind of a flip. I like that. It had everything going for it. And so that's kind of the way I use odds enhancement in Forex. It's not necessarily the linear steps, I think, that are currently depicted. It's the really strong ones. So not only do I personally, in my risk reward plan, I like very high risk reward, I also like very, very high probability, because you don't have to take every trade everywhere. And like I said before, taking a trade on the JPY or USD JPY is taking away the opportunity cost of taking a trade with, Aussie dollar or whoever else. So you do have to think, I think, as you're a trader, in terms of competitive advantage and opportunity cost, because every dollar, there's no free meal, right? And what that means in economics is that every time you go out to eat with someone, even when they pay for it, you have the opportunity cost of where you would have been somewhere else. And so that really applies in trading and investing. And so that's why I had said this to be my entry, because of all of those reasons above. And the reason I didn't do this is because there was, a good amount of a gap here between unfilled orders as I see them, down here on the weekly and monthly, and this one. So let's go forward in time and kind of see how this played out. And I think this will kind of circle it all to you guys. So if you see here now, so now I'm going to show you guys all time frames. So there it is, guys, from the daily down to the 15-minute, from the monthly down to the 1-minute. You can see how perfectly this kind of plays out. And it's just one of those things. It just works really, really well. I can oftentimes, in my opinion, lead supply and demand in the sense that, like, you can identify the unfilled orders before, like, a rally-based rally forms or something like that, because you will catch it before it develops. So, if we cut down to like smaller time frames, later in the future, let's say a couple of weeks from now, we'll probably see a supply and demand zone in the area that we had previously identified as the wicks, or where it retested. So in that sense, I think a lot of times you can lead supply and demand. With that being said, there's other things that you guys might be asking, like, why now do you guys see maybe the box being, instead of being up here, the 15-minute box, or the smaller time frame box was down here? And that's when I take into account, the quarters theory. So I didn't think that the 1300 was going to stick. So I thought it was going to be kind of an impulse move. And so then if I wanted to take profit around this area, and I include my butter areas and include my quarters, it would be in the 90s, 95 or so. And that would have been my target to go long from here. So there it is, guys. I hope you guys found that video helpful. Like I said, I'm a big supply and demand trader. I love all the curriculum out of today. I'm not saying there's anything wrong with it. I'm just saying, if you have a lot of times a hard time maybe finding unfilled orders or identifying the best place to find supply and demand, even just going to this area by cutting down the time frames. You could have gone into this demand area and hopefully, you know, not stopped out. But it's just an easier way if you're having a hard time, or a different way, I should say, a different way if you're having a hard time identifying zones or curve to find where you might like to control any given price. And then you have to consider like different time frames and the development of different time frames. And so yeah, I did take profit from, you know, a monthly zone on the 15-minute supply, but that's because on the most recent time frame, and that's when you can kind of go back to even fresh and authentic. On the smaller time frame, yeah, there was a brick wall that was obviously being built on the, you know, 3 or 4 hour time frames ahead of the news announcement. That was very obvious, and that's where I scheduled my target to be at when we planned this out before the announcements about a week prior with beta, and we drew all this out ahead of this. It was very clear that there was a lot of sellers there, so that was just more of a current market condition situation where, you know, I would have taken increments of profit, yeah, on the smaller time frame, because it was very obvious that sellers were forming and building up there. So I hope you guys find this video helpful. Let me know in the comments below. Again, this is not to take away from supply and demand or from core strategy or anything like that. This is simply if you're having a hard time finding zones and curve, or even your trading style, this is something that really helped me when I set through this class, and I modified it quite a bit. But, you know, a ton of credit to Jody and David Warner, because they're the ones that really helped me conceptualize this and then build on it and adapt to it. So, let me know if you guys found this helpful. Hopefully I can answer any other questions for you. I hope this wasn't too advanced. I know a lot of you guys asked me to make a much more introductory step-by-step video on the concepts that I had made based on this a couple of weeks ago. So because this is a trade that I had gone over with a few of you guys in this OTA Forex group, and then it happened pretty much right away, I wanted to kind of show you guys this because you guys had already some context of this style and this particular way of trading, and we had just talked about this trade a couple of days prior. So anyway, guys, have a fantastic rest of your day. Happy trading, and I'll see you guys next time.